Good afternoon, everyone. This is Arpit Singh, and today I'm going to present the topic banks, which is a part of one of the eight major financial sectors. So, just let me start the screen sharing. Okay, so this is my PowerPoint presentation on financial sector, and since we have to present only one uh, major financial sector, so I have decided to do the presentation on banks. But before starting with this, I would like to talk about that what is financial sector. So financial sector is a sector which provides financial services to its clients. Now these clients can be either your uh, corporate clients or even the retail clients, the individual ones. It can be both. So that is the financial sector. And in India, there are eight major financial sectors. If we are going to talk about, we have provident funds, we have banks, which I will be talking about. We have share market, we have insurance. So we have several financial sector. Eight was discussed in the session, and from those eight, one was banks. So now let us start with banks. So, what is banks? So, banks are financial institutions which provide financial services to its clients. Again, who can be the clients? It can be the corporate clients, just like the company Aspire Consultant is a corporate client, or the retail clients, the individuals like me or any other person. Again, here we can see that what are the financial services which they provide. So, they have accepting deposits, providing loans, payment processes, wealth management, and many others. In many others, you can have even services like currency exchange. If we are going for some foreign trip, international trip, we have to do the currency exchange, or even locker facility if we want to keep something our precious like golds or jewelry, and even money. We don't keep them in homes because they are not safe, so we keep them in banks, in locker facilities. Now there are three types of banks. First one is retail bank, the individual and small scale business, especially for MSMEs. So retail banks, they deal with individuals like me and any individual person, and any small scale business like SBI, okay, State Bank of India, or HDFC. All these are retail bank as well as commercial banks also. SBI is a retail and commercial bank both. HDFC is also a retail and commercial bank both. Why? Because they deal with individual people, as well as both of these banks, which I have taken as examples, they deal with corporate clients also. Now we have investment bank, which deals with complex finance and even international currency and trading. So we have huge investment banks, the example being Goldman Sachs and JP Morgan. So they deal with complex financial issues and even the international trading. So they provide information to their clients that where they should invest, how much return they will get in which investment, and what things they should do. And who is the regulator of these banks in India? So in India, the regulator of these banks is Reserve Bank of India, which was founded on 1st April 1935 in Kolkata. And like every country has their own regulator, the central bank or the apex bank, which we say. So here, Reserve Bank of India is the apex bank. And here I have attached a logo also of Reserve Bank of India. And now we will see how banks work. So like any individual, Mr. A, suppose, he is going and depositing money in the bank. So what will bank do with that money? There is a term cash reserve ratio. That much percentage, suppose here it is given 10%, Bank keeps with itself, because if Mr. A comes the next day to take his money back, a bank has to give it. Or anybody is withdrawing money from ATM, bank has to give that. So they keep that much money, for example, 10% in this case, and the remaining 90% they provide as loan. So that is circulated in the economy. Okay. And again, when that 90% of the initial deposit is lent out as loan, it creates, it is used by many people, like those who ever requires loan. For example, they want loan for infrastructure development, so that leads to the development of the country. And that is why it is very important that banks should not keep money with themselves. They should do the credit creation is a very important thing for banks. And we know that when you are keeping your money in bank, you are going to earn interest, and a bank is also going to take the share. So of course, bank will give you interest, and whatever loan bank is giving, they will earn interest from that also. So this was how bank works. Now we have the merits and demerits of banks. So if we talk about the merits, we banks are convenient because 24 hours available. You have ATM services, debit card, credit card. Even nowadays, UPI is also linked with banks. So of course, it is very much convenient. Safety and security, of course, banks are very safe. They have huge vaults with the proper security things, and they keep our precious gold jewelries or even money there. Then credit facility, as I have mentioned, the credit creation is done by bank. So that is a very important aspect of it. Liquidity means that it is very easy to take out money from bank. Like I have gone to the bank and I am going to withdraw my money back. Other than FDs, like in fixed deposit, it is not so easy to take out money. And if you are taking out money, then some penalty will be charged. And economic growth, like I have said, that due to credit creation there will be multiple multiplier effect in the economy, in infrastructural development, in other areas. So of course there will be development of the country, and hence there will be the economic growth. And if we talk about the demerits, there is fees and charges. You have to fee, like for the locker facility you have to pay some fees, some charges. Then low interest rate. Whatever the interest rate bank gives to the depositors, it is low, especially if I'm talking about FD. In FD also it is low, and it depends upon the age of the depositor, the time period, and the amount. Next is bureaucracy. Bureaucracy, especially in government banks, they are very slow. Especially, we all have heard about SBI, that they are infamous for their lunch timing. That whenever you will go, they will say that no, this is the lunch time. Come after sometimes. So that makes it a slow process. Then you have technical issues, especially in rural areas. Still, we have outdated technology. We do not have proper computer systems and everything, and so there is technical issue and online frauds. Like every one of us have experienced this, that you will get some call asking to click on some links or give the pin or OTP. And so if you are not digitally literate, then it becomes a very big problem for the people. So this was my entire thing, my entire presentation on banks as a part of financial sector with its merits and demerits. Thank you.